Folks, there's a tremendous amount of anxiety with regard to the healthcare stocks, and we're going to be talking about symbols UNH. I first began talking about that stock back on May the 17th, 2025. I'll link to it at the end of this video, and you can watch that video in its entirety. We were long of it. We sold half of our position. We are still up on the remaining 50%, but we do plan on buying more. We're also going to be talking about CNC, Centene, and then, of course, Molina, which is MOH. So we have three stocks, two different types of trade. One, UNH is setting up for a potential double bottom setup on a weekly time frame, whereas MOH and CNC are pretty much where, on a technical basis, where UNH was back in May 17th when we first started a bull operation on that stock. So we're going to talk about the technicals of all three of these stocks. We're going to talk about valuations, and we're going to talk about trade strategies for each one. And most importantly, I'm going to talk to you about catalysts. What will send these stocks up higher? I have three primary reasons as to why I think that these stocks a year from now are going to be measurably higher than where they're currently trading. I'll leave off with those reasons, so please watch the video in its entirety. Don't forget to leave a comment. I will reply back to you. Leaving a comment, liking, subscribing to the channel helps me out with the YouTube algorithm, so please take a moment and like, subscribe, leave a comment, and again, I'll definitely get back to you. So I'm recording this on Sunday, the 27th of July. As we do every Sunday night, we're going live 6 p.m. Eastern Standard Time when the futures markets open up. So click that notification bell. Below there is a listogram of where I believe that we have serious support on the triple Qs, which I believe are extremely overvalued at current, as is the entire stock market. So take advantage. Link below, download the free listogram. That's it, it's free. Okay, let's talk about UNH and where we're at in this cycle. And it is a cycle. So we're going to be using TrendSpider here. TrendSpider helped identify the bottom back here using fractal support. We entered there and we sold half of our position just before it broke down below $300 per share. That was our line in the sand. And sure enough, we have retraced here. Do I think that UNH is done going down? I kind of hope not. I would like to see a continuation pullback on the stock. My price target is at around 170. We may even flash a 160 handle. Would I be surprised to see the stock gap up this week and that's the bottom? No, not at all. We're open-minded about where we're at, again, in this cycle, and let's overlay some trend lines here to identify where that support level is. Again, we're using TrendSpider, where the trend lines draw themselves, and here you have it. So this is the algorithm identifying where there is support below. I think that we can move down to, again, a 160 handle, which is at or around where support is at current. So on any pullback, I would be an aggressive buyer of UNH. And again, stick around for the reasons why I am bullish on UNH stock for the long term. Now, in terms of valuations of UNH, we have the PE multiple at 11.68. It's very attractive. It's also paying a dividend. And this is going to play a factor in why I think longer term, this is going to be a stock that's going to be under accumulation sooner rather than later. Now, where does this multiple stand relative to history? Well, let's take a look. Let's get curious. Here's the price to earnings multiple on UNH going back 10 years, and we are at 10-year lows by a long shot. We are at multi-year, multi-decade lows on UNH. This stock is cheap. And when you take a look at it at a price-to-book basis, again, we'll go back 10 years. The lowest value of this stock on a price-to-book basis, going back at least 10 years, I don't have a subscription here, so I can't go back 15 years. And when you take a look at price to sales, again, we are at bargain basement pricing here on UNH stock. Now, what we want to do next, we want to take a look at seasonality of UNH stock. And this is 35 years worth of data. That's a little bit too much data. Let's go back to 2010. And you can see that July is a pretty good month for UNH, except for this year. August is not a good month, and September is a very poor month. So the way I view this is that, seasonality is very helpful. The problem is that it doesn't take into account binary events that UNH has gone through. So does seasonality really matter here that much? It's yet to be seen. I don't want to say no. I don't want to say yes. What we will do is say this, is that we will take it into consideration when we're determining position sizing. If we see continuation weakness into August, we'll make the assumption that weak stocks tend to get weaker, and we'll wait before we load up on UNH. And if seasonality is a factor, then September is the month where we want to become very, very aggressive on UNH stock. And you can see thereafter, October, November, very, very strong months. So while seasonality looks to be a little bit of an obstacle at current, longer term, isn't this a great tool to have? So again, it helps you with determining when's the appropriate time to buy. Support levels, seasonality. Now, when we take a look at this on a weekly view, the next few weeks, it's really a coin flip as to which way the stock goes. So we'll sum up seasonality on UNH by saying there's no reason to go aggressively buying the stock right now, especially since we know that last week we closed out the week at the lows of the week, and in all probability, we're going to continue lower. That's fine. Now, when we take a look at one of the counterparts, CNC, which we are long of, we added more here on Friday. So we own UNH. That's more of an investment. CNC, more of a dead cat bounce type of trade. And I'll go into the reasons why that trade is a dead cat bounce trade at this point in time and not an investment. So let's take a look at the chart. Let's talk about why we got long of it. I created some support levels I was watching for the stock to hit. This is not reflective of the pre-market activity. Let's go to the pre-markets, because I was watching it on Friday morning after they reported earnings, and you could see that they just wiped the stock out. It moved all the way down to a 22 handle on Friday. And this reversal bar here told me you gotta start buying the stock. They're going to defend the support level. So on a weekly chart, we had a nice reversal week. Does this mean the stock is done going down? No. We want to see some more sideways consolidation. We want to see stability. We want to see all the big down volume bars on a daily and weekly time frame. Let's bring them up. We want to see them go away, because that'll tell us that the institutional sellers are leaving. They're done. So here was volume last week. We had a reversal bar on the week on big up volume. Good stuff. But you could see the prior weeks, we had a tremendous amount of negative price action. So we did not want to, go buying the stock aggressively. We did 3 buys. Each buy represented 20% of our intended allotment. So buy number 1, 20%. Buy number 2, another 20%, bringing us up to 40% of our intended allotment. Then we doubled it up on that reversal bar on Friday. Now, when you take a look at a daily chart of CNC, again, a very nice bullish reversal bar. We still have overhead supply here at around $29.50, $30 per share. Now, the reason why I felt it was safe, take note before we leave volume, take note of the volume on Friday. Very, very nice. The reason why I felt it was safe to add more aggressively was due to the fact that earnings in the rearview mirror, they rallied it off the lows of the day. They told me bad earnings, We're priced in. They closed it up on bad earnings. Good stuff. Forward-looking guidance. Good stuff. I also knew that RSI was down well below 15, allowing for us to take advantage of an unsustainable downtrend on CNC. Case in point, let's go back to the weekly chart for a moment, and let's take all of these indicators off. We'll just keep the Bollinger Bands on and the Keltner channels. Let's take the drawings off, and you could see this Bollinger Band here. This is not your standard out-of-the-box Bollinger Band. That is your third standard deviation Bollinger Band. Most Bollinger Bands out of the box, which is probably the one that most people watching this use, is a 2 standard deviation Bollinger Band. I like to use, for these purposes, a 3 standard deviation Bollinger Band, because when you're pressuring that lower band, you're eventually going to get a reversion to the mean. So I think that we have more upside here on CNC to go. So members, we'll be talking about price targets on CNC on Market Wrap this coming week. So more to come, members. Now, in terms of valuations, we saw an 11 handle on a PE multiple for UNH. CNC has a multiple of 6.89. No dividend. Now, when you take a look at the price to earnings multiple, we are at 10-year lows. Price to book at 10-year lows, minimum 10 years. Price to sales, 10-year lows. So as difficult as it is for many investors to take a look at these stocks, especially with UNH having the DOJ report that they're under investigation, it's very, very difficult for investors to say, you know what, I'm going to think out 3, 4, 10 years, 5 years, whenever. I think the stock is cheap here. I think there's a lot of negative news that has been factored into these stocks, and I think it's time to hold my nose and to begin bull operations, which is what we did back in May. So even though the stock has pulled back off of its highs, we booked profits on half of our position on UNH, and we are looking to reestablish that full position, ideally with a 160 handle on UNH stock. After that, I think that's setting up for a double bottom setup and a continuation move up higher. The same can't be said for CNC, nor can it be said the same for MOH stock. Let's talk about MOH, and I'll summarize the reasons why. So MOH, weekly chart. Now you can see here that much as what you're seeing on CNC, you have the weekly chart trading down and into the third standard deviation Bollinger Band. If you're not familiar with the significance of it, just think of it this way. It's not supposed to be there. Statistically, it's not supposed to be there. And if it's there, it's not going to be there very long. So this is truly a bloodbath on this stock. But again, this is the time where you need to hold your nose, do your due diligence, understand the seasonality, which I didn't do on CNC. In fact, let's go back to CNC for a moment before I continue on with MOH, because I skipped that. I want to be complete on all. These are probably going to be about the same. Not really. Not really. The next couple of months for CNC are technically or historically weak. That all changes at around October. I think what could be said here is that September for UNH and for CNC appears to be the time where you want to begin aggressively adding to the position, because seasonality on CNC really changes into October, then into November, which is seasonally the strongest month out of the year for the S&P 500. And you begin the year off strong as well on CNC. Let's take a look at this on a weekly time frame. Yeah, it's a coin flip for the next couple of months on CNC. So while, yes, we're oversold, can we rally? Sure. Can we pull back? Sure. Can we consolidate? Sure. We're open-minded. We're not making a determination right here, right now, that we must go buying with reckless abandon because the stock is historically inexpensive. Well, it can get cheaper. There's a lot of bad news out there, but I think that is pretty much factored in. Now, Let's head on over to MOH. We'll continue on with that analysis. Oh, and by the way, we're using TrendSpider. Folks, if you're not using TrendSpider, you're trading with one arm behind your back. The analogy I use is that if you're an archer, you're missing an arrow in your quiver. This is a great tool. You can see how much I use it. I value it. If you want to see what the crooks in Congress are buying, they show it right here. Go to what's happening now. CEOs buying stocks, insider trades, 5 million plus. You could buy these on separate subscriptions from other services and pay big money, especially this one here, the Pelosi tracker and government sells, as well as government buys. And I just entered UNH, the symbol, and you can see that Ro Khanna, congressman out of California, he's buying UNH stock. Michael McCall out of Texas, he was buying back in May. This is the transaction date, but it's reported later on. Marjorie Taylor Greene, this is around the time when I first began coverage of UNH stock. So you have congresspeople, congressmen, women, they're buying up the stock. Let's check in with CNC. No recent trades. You can see that Ro Khanna is here as well. He was buying in April of 23. MOH. You had a Congressman, Earl Blumenauer, buying back in June as well. So a lot of buying in June. Tell me they weren't talking to each other. He's out of Oregon, Democrat. Doesn't matter. So you can see the value here that TrendSpider gives you, besides the fact that all you need to do, click a button, and you know exactly where your support and resistance levels are. You know exactly what to expect in terms of seasonality. There's so much more here. I just can't possibly cover it on this video. You get too bored. Head on over. Use that link below on YouTube, link above on Twitter and Facebook. Get 35% off using my discount code CON35. Again, CON35. Get that discount. Take advantage of it and enjoy. You'll have a great time with it. Now, MOH stock, I think we're very, very close to a bottom. Why am I so confident that this stock, which closed just off the lows of the week last week, why am I confident that it's probably done going down? Well, we're looking at a weekly chart, but the weekly chart is not telling me everything I need to know. However, when I overlay quarterly support below and I overlay the automated trend lines, you could see that in dashed line on the weekly chart, that represents quarterly support. We tagged that last week, and what did we do? We bounced. So I think that we are very, very close to a bottom here. Doesn't mean we can't make new daily lower lows on Monday, Tuesday, next week, but I wouldn't be the least bit surprised to have learned that last week was the low for MOH. So clearly you could tell that I'm bullish on these stocks, one more so than others. And let's talk about the types of trade that we're looking at. I mentioned earlier that I like all three stocks, but for two different trades, right? So let's go to UNH stock. And this really doesn't require any overlays, no indicators. All you're looking at is price. Simple as that. So blank slate. Let's start all over again with UNH. UNH, you'll remember, had a massive dead cat bounce, but rarely do you see a V-shaped recovery in individual stocks. You could see it on the indexes, but rarely do you see it on an individual stock. I'm not saying it can't happen. But in this case here, we're always concerned about the fact that we're going to lose steam and head back down and try to put in a higher low. That's what I think that we're doing right now. So for a swing trade, which is a very large trade, we put a lot of shares into our portfolio to take advantage of an extreme oversold stock, and we booked half of those profits. Now we're looking to reestablish, but this time, not for the short term, for the long term. And what we're looking for on UNH stock is two things before we execute on buying more shares. We're looking for a higher low. That's step number one. We need to see a higher low, or we need to see a double bottom, a retest of prior lows, and it's got to hold. Step number 2 is that we need for UNH to rally up and through the highs of June. That will tell us that, okay, we have a higher low, and now we're starting to put in higher highs. And that tells us, okay, it looks as though all the news is factored in. The stock is priced very reasonably, very cheap historically, and it's time to sit back and let this stock work for us for the next 5-10 years. The same can't be said for CNC or MOH. MOH is a bit more oversold at current, so let's go with that. Let's go to MOH. Right now, we're at levels that UNH stock was back in June. We're not nowhere near the point in this cycle where we're saying now we're looking for a higher low. We're looking for a bottom here. Remember, here's quarterly support below. Now what we need to do is we need to see a rally, maybe up to 190, 200, thereabouts. And then what we want to see is a pullback and then the higher low. We're not there yet. What we're setting up for here on MOH, or where we are long right now of CNC, we're setting up for a rally on these names, a dead cat bounce, a short covering rally. Call it what you will. Call it cupcakes. These stocks are going to have a rip your face off rally. Doesn't mean that they're just going to continue on to make new all-time highs right away. That's not going to happen. It's not going to happen. So we're probably going to rally on CNC up to around maybe $35 to $37 per share. Keep in mind that this trend line is declining. So it gets lower, that price target gets lower every single week. So my favorite out of the group is UNH. Why? Even though it's under DOJ investigation, someday they're going to pay a fine and this is all going to go away. And it's going to be a big fine if they're found guilty. I don't know if they're guilty, but they're going to pay a big fine. You're going to see that headline hit the news. The stock is probably going to sell off initially because of the billions of dollars they're going to have to pay to the government, and then automatically just going to rally up because now that DOJ investigation, it's in the rearview mirror. It's priced in. So don't let the DOJ investigation let you lose sight of the fact that the stock is technically setting up for a bottom, and it is very cheap on a historical basis. Everything else is just noise. Also, when you take a look at MOH, while it's still cheap on a multiple basis, it doesn't pay a dividend. And when you take a look at the valuations on a historical basis, 10-year lows, 15-year lows on PE multiple, price to book, price to sales. And all of these companies, despite all the bad news, you would think they were going out of business, yet they're still making money. So there's no dividend here, and it could take a while for the stock to recover. Same thing holds true for CNC, no dividend. MOH, no dividend. However, UNH pays a dividend. So we're getting paid to wait for the stock to recover. Now, if you like MOH, you like CNC, for whatever reason you do, you can always sell covered calls against your position, create another dividend. But I could also do the same with the UNH stock. So we can get paid with two revenue sources on UNH stock versus just one on CNC and MOH. So now let's talk about why I am bullish on the group. Let's visit the Shiller PE multiple. We closed out last week at highs not seen in valuations on the stock market, not since the dot-com bubble. This is significant. So we have valuations on the S&P 500 at multi-decade highs. So the risk built into the overall stock market is quite high. All it needs is that pin. Whatever the news event is going to be that pops that bubble, it's going to send this stock market down lower. I'm not saying it's going to happen this week. I'm not saying it's going to happen next week, but we are not growing into this valuation this earnings season. The Buffett indicator, overvalued. You are here. We are close to 2 standard deviations beyond historical trend on this indicator. Now, you may be saying, wait a minute, you're making the case against these stocks. You're saying buy when the multiples are high. Well, let's go back in time for a moment. Let's go back early this year and take a look at the S&P 500. We began the year by trading down, tariffs, et cetera, But what did the XLP do? XLP is the ETF for staples, consumer staples. So now let's do a comparison of the S&P 500 and the XLP earlier in this year. We began the year with the S&P 500 trading down on the year. What did the staples do? They rallied. What didn't rally? Bonds. Bonds did not rally. This is the TLT. They sold off. Normally they're a safe haven play, but not this time. Money was flowing into this staples arena, unintended pun. So it appears as though what we're doing right now is that we're setting up on the staples for a potential bull flag setup. So is history getting ready to repeat itself where you have very high valuations on the high beta tech stocks, whereas the staples are more reasonable, and what's got probably the best valuation out there are the healthcare stocks. So why else would they rally besides valuations, besides the potential for sector rotation into safety stocks as the high-tech beta stocks come in for correction? Look no further than Zero Hedge. I'm going to link to this article below on YouTube, so if you want to take a time and take a look at the article. In short, they are going to have in 2026 the largest hikes in 5 years. This is going to be the primary catalyst as to why these stocks longer term, you need to be thinking long term here, they're going to have pricing power. And that, my friends, will be the reason why a fuse gets lit under these stocks in the coming months. And it's going to begin very soon. Once you begin seeing headlines like this, the news is already out there. You're seeing Congress people already buy the stock. You're going to see institutions step in and buy the stock. Think of CNC. They reported forward-looking guidance, no bueno. However, the stock closed up on, not the day on Friday, but on the week. So these are the reasons why I think that these stocks are in the process of bottoming out and thinking out longer term. UNH, an investment, you're going to get paid a dividend, you could sell covered calls, and while you're waiting for the stock, you're getting paid 2 sources of income besides the net asset value appreciation. In the case of MOH and CNC, we're looking for a dead cat bounce here, a rally up to resistance levels that I covered earlier. Then we're looking for a retracement, and then a higher low, and then a rally to new higher highs. Then they become investments. UNH is much further along. It's a household name, so it pays a dividend. So that's why I think it's the better play for me anyway. And that's it, folks. Don't forget, TrendSpider, 35% discount. Use the link below on YouTube, link above on Twitter and Facebook. Don't forget to join us live, 6 p.m. Eastern Time. Every Sunday night, we go live to watch the futures action. We will be going live tonight. Don't forget, like, subscribe, leave a comment below. I definitely get back to you. Everybody have an awesome remainder of your weekend and a great and profitable trading week. Stay healthy. Be well.